Hello everyone and welcome to this presentation with House of Control. My name is Øystein Lodgaard. I am the analyst that cover House of Control here at ABG. With me today I have Carl Fabian Flaaten, which is the CFO of the company. He'll take us through a brief presentation before we go over to some Q&A. So Fabian, please go ahead.
Thank you very much, Øystein, and welcome to this presentation of House of Control. We truly appreciate the opportunity to present at the seminar, and I'd like to thank everyone attending for your interest in our company. Slide 2, please. My name is Carl Fabian Flaaten. I'm the CFO and have held this role for the last 5.5 years. Today's presentation will provide you with a brief overview of our history and our current offering. And I'll share some of our plans on where we go from here and our ambitions for the next 5 years. So moving to slide 3 for a quick company overview. We brand ourselves as the CFO's best friend. Our product vision is to provide CFOs with financial control and enable them to optimize business processes. House of Control offers best-of-breed horizontal software to more than 1,600 CFOs across the Nordics, as we have it here. For those of you who have seen our message this morning, we made another acquisition yesterday, so we're now bringing the total close to 2,000. So we're very happy to report that. The market we operate is large and underpenetrated with limited direct competition. Our subscription-based business model is highly scalable, and approximately 95% of total revenues are recurring. Slide 4, please. We have more than tripled our ARR over the last 4 years. New sales have been driven both by an increasing number of contracts and also increased average deal size associated with a stronger offering. We have also consistently grown the ARR on the existing customer base. Customer success teams have focused on upselling of both existing and new modules, and we have seen positive effects of behavioral pricing models that allow for flexible pricing depending on the customer's usage patterns. Our growth journey continues and has accelerated with the acquisitions we have carried out over the past year. Moving to slide 5 and splitting our ARR into geographies. Norway still accounts for the bulk of our business, but Sweden and Denmark are growing fast. We've also begun to establish ourselves outside the Nordic region, and we are assessing M&A opportunities to accelerate growth in all our markets. Slide 6, please. The customer base is highly diversified, and we see virtually no exposure to industry and company-specific risk. Now, people often ask me how we manage to attract customers from 63 countries when we only operate in the Nordics. And the answer is that we have international corporations do the job for us. Several international companies have noticed that their Nordic subsidiaries are able to provide more granularity in their reports and forecasts and seem to have a better overview of their business. This can often be tracked back to their use of complete control and our other offerings. In such cases, the international companies are usually quick to implement our solution in all their subsidiaries when noticing it, bringing us with them out in the world. Moving to slide 7 to look at where we come from. Now, this is a good illustration of what we meet every day. CFOs typically start to lose control over decentralized contracts when companies reach 50 to 100 employees, and especially if they have several different locations. How do you keep up with all the activities and how do you maintain an overview of all the contracts? And what happens when employees who have signed auto-renewing supplier contracts leave? and what commitments are associated with specific locations and departments for the next 6, 12, and 18 months. And what does that cash flow look like? This is where we come from. Our software originates from a contract management system that provides the CFO complete control over contracts, assets, and obligations. Let me share an example. Imagine that you're a CFO in a medium-sized company with several locations and maybe a few subsidiaries. It's Friday afternoon. You're getting ready to leave the office and take your family on a long-awaited weekend trip. Then your cell phone rings. It's the chairman of your board of directors telling you that the board would like a briefing on the current cost base and an updated forecast and overview of potential short-term cost savings associated with potentially closing one of the locations to understand how quickly overhead savings can be materialized and how quickly this can have effect in the cash flow. Now, they already had some discussions amongst themselves as they are concerned about the current economic climate, so they would like to meet Monday morning. Now, if you have our complete control solution, the touch of a button will give you this report. If you don't, I think I'll have to disappoint your family and cancel the trip. Now, we've come a long way over the recent years and now offer a lot more than contract management, as you'll see on slide 8. Our main product is still the complete control solution, which offers an easy financial and operational overview over all the company's contracts. This accounts for 59% of our current ARR. On top of the complete control solution, we've developed 23 supplementary solutions on areas such as rent, ESG reporting, digital signing, and so on, which combined account for 17% of current ARR. These solutions represent customer-driven innovation. If you receive a request for additional functionality that could be relevant for a large share of our customer base, we typically develop a solution and bring it to market through our customer success teams. Let me share an example on this. Our rent solution. This was developed when a large Nordic hotel chain using complete control asked us if we could help mitigate pain points related to complex and variable rent agreements for their hotels some years ago. These rent contracts have several components. A minimum amount component, a revenue-based amount component, amongst others. And in some cases, there are also central support activities like marketing support. Now, this proved to be challenging in budgeting and forecasting respect. We fairly quickly provided a solution, which they are very happy with to this day. And we now have several hotel chains as customers on this. But more interesting, the rent solution has also been adopted by many retail store chains and others facing variable rent agreements. The last product area consists of our solutions for IFRS 16 compliance and business process solutions that integrate with incumbent business systems to support efficient operations. These solutions account for 24% of current ARR. We developed and brought our IFRS 16 solution to market in 2018. Other solutions in this category currently originate from the acquisitions of Din ERP, Effectplan, Business Analyze, and as of this morning, Agreement. Moving to slide 9 to summarize the journey. Starting from contract management back in 2008, continuous product development and the acquisitions we made over the past year have added business process systems, forecasting and budgeting systems, and most recently, analytics, reporting, and business intelligence dashboards with the acquisition of Business Analyze. With these elements in place, we can take a broader role in our partnership with the CFOs and offer a complete overview with valuable insight and provide actionable intelligence. We like to say that we are on a journey resembling that of Coupa in its early days, and we aim to be the first application a CFO logs into in the morning and the last he or she logs off. Slide 10, please. Overall, our acquisitions have more than doubled our addressable market. This opens opportunities to grow into a Nordic market that's around 60 times larger than our current size. Moving to slide 11 to look at how we approach this market. House of Control is an efficient sales machine with a fantastic commercial culture. Our in-house call center consists of more than 25 meeting bookers centralized here at Høvik, creating sales opportunities for our hunters in all our markets. This team has generated more than 4,000 meetings so far this year alone. We treat our hunters as consultants in the sense that we fill their calendars with meetings to maximize utilization. Sold contracts are immediately handed over to customer success for processing and onboarding. This ensures that the hunter maintains his or her focus on securing new accounts. It also ensures that all customers are onboarded properly and get an optimal start on their customer journey. It also enables us to tailor direct and efficient remuneration models, ensuring that our employees are incentivized to work on their specific task. For example, a leads generation meeting booker doesn't receive a bonus for booking a set number of meetings. They receive a bonus when a hunter actually closes a sales opportunity on one of the leads they have generated. Now, this arrangement ensures that the booker is incentivized to book high-quality meetings with qualified leads instead of booking a lot of poorly qualified meetings that could potentially reduce the hunter sales efficiency. Slide 12, please. And our continued growth estimates are built on 4 pillars. We see several avenues to continue our growth journey with a large untapped potential in the Nordic market that's 60 times larger than our current size. We see a strong potential in cross-sales to the customer bases we have acquired over the past year, and a large upselling potential in the existing customer base with the products and solutions we have acquired. Now, we added a new company to our portfolio with the acquisition of Business Analyze last quarter and a Swedish company agreement this morning. And we will continue to support our organic growth with more acquisitions going forward. We have strong momentum in both Sweden and Denmark, and we see several attractive European market opportunities. Our ambitions for the next 5 years are pretty bold, as you'll see on slide 13. We expect to maintain an annual organic growth rate of 30%. Now, this will increase our ARR portfolio from 169 million at the end of the second quarter this year to more than 500 million by the end of 2025. Increased upsell, targeted price increases, and a churn rate below 10% contribute to a positive development in net retention rate, and we predict this will move from today's 100% to 110% at the end of 2025. The EBITDA margin will increase with scale and move towards 40% by the end of 2025 as the current growth costs are being absorbed in the larger portfolios. And last but not least, we will fulfill our vision of being the CFO's best friend. And with that, I'll be very happy to take some questions, maybe with slide 14 in the background.
Thank you very much for a good presentation, Fabian. So I'd like to start where you ended off. So you with your target of reaching 110% in net retention in 2025, could you say something about what are the key initiatives that you will implement in order to reach this?
We've been working diligently, I would say, since Viking Venture came in back in 2015. To establish the customer success team, and we did that, in 16 or 17. We have really good pace there now. It's proven to be crucially important to reach the retention rates we are looking at currently. And remember, we had 98% last year. We are now seeing 100%, an increase of 2 points in what we define as the core household control product. So we're already seeing the effects of the targeted work that's being done in customer success. And now, especially with the acquisitions that we have done over the past years, we are now getting into the Din ERP acquisition last summer. We launched those products, so they were launched this year. We're starting to see some effects. We now have customers in all the Nordic countries on these products, and we expect also to see continued upsell as more and more of these acquired products are ready to be sold to the existing customers through customer success. Obviously, very, very important for us, as we've said many times, to control the churn and have that churn rates below 10% is something we're working very, very targeted on. Over the past year, we've been able to increase prices on average 10% on renewals. Obviously, half the portfolio is up for renewal every year, approximately for an eternity. So that will yield a 5% increase. And the effects of all this, we are confident that we will reach the 110%, but it won't be done tomorrow. It will be done gradually, like we now have done it over the last 6 months, improved it by 2%, and we will continue to gradually improve it as we move towards this end of 2025.
Thank you. And M&A is also an important element in your growth strategy. So when you do acquisitions, is the primary target to acquire a customer base or new products?
Well, we are looking for both. And let me just say this, I think today is probably the first time I am very happy to bring outdated presentation, as obviously the acquisition we did yesterday and announced this morning hasn't been reflected here. So, that shows that we are moving on a quick pace on this. We are interested in both acquiring more products and expanding the product offering, as we are saying, to become the CFO's best friend and make sure that we can offer a complete suite that meets as many as possible as his or her main pain points, let's call it that, to attract them to our systems. We are very interested, of course, to acquire, let's call it hot customer bases as well, that we can do upsell on, because it's a lot easier to sell something to an existing customer of a company we acquire than to do the cold calling on ice cold prospects. So we are targeting both, and we are targeting them in both the countries we are and also countries where we are looking to start operations.
And when you do M&A, what kind of multiples do you typically pay?
Well, that depends. And as we've seen, we communicated this morning 3.5 on this last one, and then we have been around 3, 2.8, 3, and that's the multiples we have seen now historically. We are prepared to look at higher multiples as well, obviously, since these are all very favorable to us. But it's a consideration where we look at, number one, how large is the ARR portfolio in itself, and then number two, how quickly has, let's say, the current owners or the current management been able to accelerate that? What growth rates are they looking at? Obviously, we are looking at churn as well to see there, because we know how important it is. And then we are considering what additional synergies we could bring to the table by introducing our sales organization and the product team and help this company reach their ambitions faster. So then we get an estimate of the growth we can expect. And then we obviously start our business modeling, and based on that, we derive at a set of multiples. Yes.
And just to clarify, that's 2.8 to 3.5 times ARR, right? So that would be significantly below your own multiple that you're currently trading at.
That's absolutely correct. I think we've been fortunate in those. We think those are good deals, both for the sellers and for us. And obviously, we have seen, as we have said for a long time, we have been looking to do acquisitions. We haven't done that many, for some time now. We wanted to do more, and we've seen that there has been some really high expectations, I would say, on the founders and on the managers and the shareholders, where they were expecting a lot more. So obviously that has caused us to cancel or postpone something. But the levels we are looking at now, we are happy. We think they are favorable, and there are also earn-out elements in these deals to further incentivize the management and the owners to build it stronger and bigger with us in the years to come.
That sounds like smart. And you of course, as you mentioned, expanded your product portfolio significantly over the past year through M&A, also through some in-house product, new product innovations that you have made. Have you seen a lot of effects from this already, or does the majority of the upside here lie ahead of us?
Well, we have seen, let's call it the continuous development we have done all along in Complete Control, and the money we have spent on that has definitely helped us improve the solution. So that has helped and paid off with the respects of a loyal customer base. The acquisition of Din ERP, obviously there are good products there, but I think foremost, they had a fantastic development team, 35 developers, extremely good at integrations. That opens a door for us to start integrating into other systems. And we have relaunched some of the solutions that they were offering on an on-premise basis. So we started doing that at the start of this year in Q1 and Q2. We started seeing effects where we were selling these products. And obviously, effect plan will be the same. That's integrated into Complete Control. We're now starting to see the effects. We're able to bundle, and we're starting to sell those solutions. And obviously, Business Analyze that came aboard in April, we are seeing really good results there. The second month here, when we employed our sales team, they noted the all-time high new sales record in Business Analyze for their own records for 11 years of history. So yes, we're definitely starting to see it, but it will take some time still for it to become very, very material. But we really think there's a lot of effects coming now, because it takes some time. There's some turnaround on the products, and then there's a 3-month sales cycle. So yeah, we're getting close to a perfect storm. Let's call it that.
And I know you also use the Business Analyze product yourself as a way to track the sales development process and the pipeline for new customers. I know you have very good data on your pipeline going into the second half of the year. Do you see a good pipeline going into the second half of the year? Are you tracking well along those targets that you have set?
Yeah, we absolutely. And let me first say, Business Analyze, as you said, we've been using them for years. I was totally addicted. We just had to acquire them. It's just a fantastic solution. So, and we are seeing, as we saw towards the end of, or the second half of last year, the momentum really came up. We saw that continue in Q1 and Q2, and all our early indicators and the number of booked meetings and the sales activity and the calls we're doing really sets us up for, I think, a very good quarter. And the second half is normally our strongest sales quarter. So we would expect to see some really good numbers. Also noting Q1 this year was fantastic. And that's something that's new to us, because in Q1, usually the CFOs and their team are very busy with the year-end close and all their activities and the audit. So we usually have, let's call it a slow salesman or quarter in Q1. We saw this year 150% increase from last year. So fantastic momentum, and it continued in Q2. So we are ready for the fall season, and it's hunting season now, So.
That sounds really good. Thank you very much for presenting to us today, Fabian, and thank you very much to everyone who listened in. Have a good day.
Thank you. Bye.